good afternoon, good morning. I'm Tom Penn from the Tokenizer. Those of you who don't know what the Tokenizer is, we're the news platform for the tokenization sector. And actually in the next 24 hours, we'll be launching our Who's Who guide for this year. So something to look out for. Shortly, I'll be handing over to the DigiShares CEO, Klaus, who will begin with some opening remarks and a brief overview of the sector and where DigiShares are, what they're up to, and where they're going next. After that, we'll have Mark from realestate.exchange will be speaking, followed by Evangelos from ATS Services, Oasis Pro Markets. Bob, who I last saw in Munich, I think back in September, will be talking from RE.X. Leanne from Archax, followed by Ryan from tZero. And the final individual speaker will be Massimo from SIX Digital Exchange. After that, we'll go straight over to a fireside chat, and then we'll be wrapping up, and that should all be in about 2.5 hours. So we've got a very tight schedule. My slot is done. I'll hand over to Klaus. Klaus, take it away.
Thank you very much, Tom, for facilitating today, and welcome to all participants and speakers. My name is Klaus. I'm the CEO of DigiShares, and we are extremely proud today to have this group of speakers here with us. We are grateful that they have all accepted, and in the spirit of collaboration and joint purpose to grow the industry and speak about their companies and exchanges and philosophies for the future today. I think this would be the most exciting webinar of the year that we host. Certainly we host around 8 webinars every year, but this is the one that has seen the most interest and the highest number of participants. So it should be really exciting. We have more than 300 signed up to join, so we'll see how many actually join the call. DigiShares is a part of the industry. We provide white label tokenization platform for issuance, compliance, and internal trading, and we can actually integrate with all the partners, all the companies on the webinar here today, and are partnered with all of them. The purpose of the webinar here is, as always, to educate and motivate and spread the news and information about what we're doing in the security token industry to anyone outside the industry, and focus on different topics within that space. So today, of course, we are speaking about secondary liquidity, but after the summer period, we are planning webinars for the rest of the year focused on education, regulation, tokenization in various regions such as the Gulf and Middle East, Southeast Asia, and Africa. All of these regions are areas where we see a lot of interest, where we have a number of clients, and where lots is going on. Also, of course, to educate, we have also recently launched an Ejodame course, 4 or 5 hours, I think, where you can learn sort of the details of tokenization and get ahead in the space. I think that I will also end here and close my slot and give the word back to Tom. Thank you.
Thanks very much, Klaus, and no pressure, myself, speakers. Klaus just announced it's the most exciting webinar of the year, so we've got a high bar to aspire to. Well, let's kick off straight away. We'll go to Mark Dencker, who is the CEO of realestate.exchange. Hopefully Mark's will appear shortly on the screen with a little wave, and I'll hand over to him. But while I'm waiting for that, oh, there's the wave. Excellent, he's there. I'll do a quick intro that Mark is currently the CEO of realestate.exchange. He's been working with software development since the age of 12, so only a couple of years. Is that Mark? Mark has experienced firsthand how software can change the world for the better. As an entrepreneur, Mark has held active roles in software projects ranging from tracking diabetes with Novo Nordisk to implement electronic locks with Freetrailer, to most recently heading up the online platform with the Museum for the United Nations UN Live. Mark, that's your intro. Over to you.
Thank you very much, Tom, and a pleasure to be here today. So I have a few slides. I don't know if I can share that in here, share my screen. Is that the best way to do it? I think so. Let me. Are you able to see my slides here? I don't know if you can confirm.
Yeah, all good. Perfect.
Perfect. Great. So yes, welcome everyone to the webinar, I guess. And I will obviously be talking about realestate.exchange, where we are sort of a sister organization, you can say, with DigiShares. DigiShares and Real Estate Exchange is really working in unison. DigiShares are specialized in issuing security tokens, for example, security tokens for real estate companies, whereas we are the exchange leg in that sort of collaborative effort. So basically, our goal, maybe I can minimize this. Our goal in a nutshell, our mission, if you will, is to enable anyone, anywhere in the world, to buy and sell real estate on chain. This is obviously a grand endeavor. A lot of people have tried, but we have tried also for quite some time already. We've gotten far, but there's still a lot of work to do. This is a nascent industry still, the blockchain industry. But the technology is rock solid, and there's so much potential to be able to pull this off, which I'll talk about today. But yeah, anyone, anywhere in the world should be able to buy and sell real estate on chain. I don't think I need to talk too much about the potential with people joining this webinar, but just to bring it home, the World Economic Forum has been estimating that 10% of global GDP will be on blockchain by 2027, sorry, which is equivalent to about $12.5 trillion US. The Frankfurt Business School estimates that the European tokenization market will be $1.5 trillion by 2024. So not that far away, right? I mean, 2024, for example, is a year from now. And that just speaks to the potential. We all know that DeFi and crypto and blockchain tokenization markets, they are highly volatile. But then again, all technologies that we've seen out there in the beginning, they were also very volatile. For anyone who is the same age group as myself, they remember the dot-com bubble that burst. And sure, most of the companies back then, they got completely destroyed, but there were a few that really came out on top and changed the world. So this is most likely we will see the same thing happen with protocols and dApps that build on blockchains. So yeah, the potential is massive. The state of DeFi is, as mentioned, volatile but growing. I guess I can just point to the graph from DeFi Llama, one of the many different analytics tools out there, where we can see the total value locked. So basically, all the different assets being put on chain and being used in a decentralized finance way. So that could be borrowing and lending. It could be adding to a liquidity pool, like trading, whatever you can do in DeFi at a certain point in time. And I mean, the graph speaks for itself, right? It's more or less flat in 2019, 2020. Then DeFi summer and the whole DeFi boom started to happen in 2021 to 2022. And then something happened, the Luna crash, a lot of things, FTX, a lot of things went against the world of DeFi, which brought the TVL, total value locked, back to earth. But it wasn't like back to ground zero. It was back to earth, right? We still have, for example, today, around $65 billion US moving in the DeFi space. So it's not dead. I know a lot of people, especially mainstream media, would like to say that DeFi is dead. This was an experiment. It didn't work out. But I think we are sort of where we were with the dot-com busts, after the dot-com bust in 2001, maybe 2002. And now we start to see the real winners come out on top and coming out of the gates, building solid applications on blockchain. And yeah, of course, proponents will argue that the financial industry is going to undergo more changes in the next 10 years than they have in the past 100 years, driven predominantly by DeFi. So when we look at sort of real world assets and what is actually being traded, what is actually happening in this wonderful world of DeFi. So mainly what you see is all these different utility tokens, for example, ERC20 tokens on Ethereum being traded, collateralized, added to liquidity pools and whatnot. Not so much, unfortunately, is being traded on chain, as we like to call them, real world assets, like with basically tokens with which is tied to a real world asset or something with tangible value. That could be a commodity, it could be real estate, of course, that we're focused on. That market hasn't really taken off. Multiple people have tried, but there's still not a lot of activity going on, and there could be many reasons for that. But the bottom line is it hasn't happened yet. One of the main reasons, for example, which is the example that I bring here. So what I show here, the first picture is from Balancer, one of our partners, is one of the largest DEXs in the world, where you can see all the different utility tokens being traded, ETH, the BAL token, of course, EGL, the Balancer token, etc. And then what I also show here is in a screenshot is one of the DEXs that have tried to bring on real world assets, like for example real estate. You can see this token is 1000 Florida, some property basically. But the problem is, as mentioned, liquidity for many players in the space. Just trading in this case $1,000 worth of the particular token, real estate token, is actually moving the price more than 70%. So a highly illiquid market, a lot of slippage, which is obviously why people are not using it on a daily basis. So why hasn't this space attracted liquidity before? I think there could be a lot of reasons. I'm not here to speculate on that, but certainly there's a lot of regulation to pick up. Obviously, when you go from dealing with utility tokens to real world assets like equities, real estate, etc., it's a whole different ballgame when it comes to legislation and compliance. So that's one thing that takes longer to actually get adopted and implemented in a DeFi way. But sitting from where I'm sitting, I can see a lot of things happen, and I am very hopeful that this is only a matter of time before we start seeing the next wave of innovation and liquidity, in this case, coming into this space. And obviously, we are here to make that happen and push the barriers to what we can do with real estate on chain. So I mentioned a few of the challenges that we are facing in this industry, which is getting solved right now by people like us. One is issuing tokens on chain that is backed by real world assets. Here, obviously, we look towards our partner organization, DigiShares, who've been specializing in tokenization of security tokens for many years now. So for example, a lot of our clients, they will have a white label with DigiShares where they can issue their tokens. And then a question that pops up very, very quickly after that is, okay, how do we make this liquid? How do we create a marketplace for this? And that's where we come in. So one challenge is issuance. Second challenge is liquidity. Like I just mentioned, other players in the market have tried this. It hasn't really hit off, but we are partnering up, for example, with existing DEXs and AMMs like Balancer to tap into their liquidity, their trading volume. They have more than 10,000 liquidity providers. There's a lot of things going on these DEXs and DeFi protocols. And instead of trying to compete with them, we try to build on top of them. There's many different things that are beneficial in that partnership like that. One is, of course, liquidity, which is a key challenge, but another is also security. A lot of these clients that we operate with, real estate developers, agents, brokers, etc., they want to make sure that this is safe. And how do we guarantee that? The best guarantee you can give is that something has been operating in a live environment, such as Balancer, for many years without any hacks. So this is also a key point that we could mention when it comes to liquidity. Like, you won't attract much liquidity if liquidity providers don't feel safe. And then the last part, which I think from a personal perspective at least, is sort of the holy grail, is collateralization. If you can start trading real estate tokens in a DeFi platform or DeFi protocol, there's really no stopping you from providing that real estate token and borrowing against it on something like Aave or Venus or similar lending and borrowing markets. All those rails and all that technology has been built out. It's really just a matter of having price discovery of the real estate token happen, which will happen on an exchange like ours. And once you have that price discovery and the price oracle starts to do their thing, there's really nothing holding you back from adding it to a lending and borrowing market for collateralization. So that, I think, would be truly remarkable when we get to that point. It will take some time, but we will get there once we have the trading volume starting to flourish. And that would just be a beautiful, beautiful thing to see, being able to not just buy real estate and sell it, of course, but also borrow against the real estate that you are purchasing. So we are in stealth mode, you can say, right now. We are testing with real clients, real properties, etc., where you have to whitelist and be able to create orders, etc. So we are in a stealth mode right now, and we invite anyone to go on realestate.exchange, sign up to our newsletter. Basically, let us know if you're interested either as an investor buying real estate or an issuer selling real estate. We are right now in the midst of talking to both of you. But just to give you a sneak peek, here you see the DEX. And actually, when we talk about DEXs, just for people who've been operating in this space, you would know that there are actually two types of decentralized exchanges that exist in a sort of rough manner. There's the AMM, automated market maker, where there's instant finality. You swap, for example, Ethereum to a real estate token, like I'm showing you here. So that's sort of the AMM instant finality option when you are building a DEX. And then there's the order book style kind of DEX where you see buy and sell orders. You can basically see everybody can see how the depth of the market is, but like you would expect from typically a centralized exchange like Binance, for example, if it's crypto or Nasdaq. And what we are doing is we are actually doing both. We're doing both the AMM option and the order book style option. What I'm showing you here is the AMM option, but the keen eye will notice that we have disabled the swap button in this screenshot that I'm showing you here, but we have enabled the place order button. So we will start initially when we go live and have the first property listed on our exchange. We will start with the order book simply because we feel more safe on our clients' behalf. We feel more safe having the order book where obviously the seller or the issuer of the real estate token can sit there and obviously put up some real estate tokens for sale as a sell order, and then see how the buy orders come in. And only when the seller is actually accepting the orders, there's a trade. It's a much more safe environment to be in when you are initially starting to launch these real estate tokens, when you don't know exactly the volume and the interest that's going to happen around the exchange as a whole, realestate.exchange, but also the real estate asset. So just to give you a sneak peek of the order book, so you have obviously buy and sell orders. What you see here is some examples of buy orders. Notice that you can bid on different tokens, different real estate tokens that we're testing with, and we will probably go live with when we go live. And then, of course, you can choose whatever token that you're paying with. So that could be ERC20 tokens, typically, both stable coins like USDC. It can be other utility tokens like Ethereum or wrapped Bitcoin, and even our own brick token, which we will launch together with our exchange. So yeah, that's it's a decentralized marketplace, so you can really create bids paying in any currency allowed on chain, which is the beauty of decentralization, one of the beauties of decentralization. So the roadmap ahead, we are working out a couple of things, I should say. First and foremost, the big hurdle to overcome with all this, because a lot of this technology has been tried and true and built out by innovators in the DeFi space. What's new here is the compliance part, and we are applying for 2 licenses to be able to launch this and operate in a compliant manner. So we're very excited to get both of these licenses in place, of course, but at least one of them, so we can go live with the order book that I just showed you guys. So yeah, the phases that we have is first the bulletin board or order book style, where you can create buy and sell orders. And then shortly after, we are planning to launch the AMM with balancers managed pools. So note that we're not creating our own liquidity pools that is completely isolated in our protocol. We're actually tapping into the balancer protocol, building on top of their existing managed pools with all the benefits that I mentioned prior in this presentation. The pipeline right now, so we have multiple dialogues. When I did this presentation, it was 20, but I think it's more 25 today. So we have multiple different real estate firms and developers that we are in dialogue with. We shortlisted some of them and signed MOUs with fewer than them. So what we really want to do is have a nice spread of real estate assets distributed around the world. I'm sitting here in Copenhagen in Denmark, and we do have properties in Denmark that will go live with the exchange. But we also want in other places in Europe. We have MOU signed with a few properties in the States, in the US, and then we are in talks with properties in both Asia and Africa and Latin America. So yeah, we want to be truly global. DeFi and blockchain is a truly global endeavor. So we want to reflect that with the properties that we list on our exchange. For anyone who's more interested in the technical parts and the chains, the blockchains that we integrate with, so we are focused predominantly on EVM chains, starting with Ethereum mainnet. This is where all the action is right now. This is where all the liquidity is right now. There's a ton of different exciting stuff happening in other ecosystems, but this is where by far the most value is locked. And that's also why we start there. So we start with Ethereum mainnet, and then we will move on shortly after to layer 2s like Polygon, Arbitrum, and Optimism. And then we branch out from there to integrate with other EVM chains like Avalanche, Phantom, and Binance Smart Chain. So those are the chains that you can expect that we will use and integrate with when trading real estate on our exchange. So thank you very much, everyone, for listening, and happy to answer any questions, but I believe that will be at the last part of the session today.
Brilliant, thanks, Mark. Actually, quick questions have come in. I think we've got a little bit of time still for the next speaker, so can't let you off straight away. Although I see one of them has been answered in the chat section already, which is excellent. Thanks for that, Klaus. Let me pull one up here to Mark Dencker. Why Balancer and not Uniswap v3 will limit range liquidity?
Yeah. It's a good question, and we would have loved to work with Uniswap or Unilabs. The thing is, Uniswap doesn't seem too interested in adopting or at least configure their liquidity pools with real-world assets. In our case, for example, we will be issuing ERC 1404 tokens, security tokens, and Balancer is building out, I mentioned it briefly, but these managed pools, which is perfect for that. They come with different capabilities where we are first and foremost compliance, and we create basically pools that are a bit more safe, I could say, for liquidity providers. So for example, what we need to do, we can't have completely permissionless pools, which is what Uniswap does right now. you need to be able to restrict it to wallets that are whitelisted. An example, when you go on realestate.exchange, you can see everything. You can see the order book, you can see the AMM with the swap button and all that stuff, but they will all be disabled until you have verified your account. We need to know who you are, basically. This is by law. This is not our choice, but this is by law. This is how we need to operate in a compliant manner. And the pools that Uniswap have right now simply doesn't allow for that. So that's just one reason on the compliance side. A second reason, I guess we can mention, which is quite key for our clients, the issuer of the real estate token, is to have circuit breakers. So we know that the markets get manipulated, especially crypto markets, and we expect no less for the real estate token market, that there will be whales coming in and try to manipulate the price up or down to their own advantage. So what we've done is we've implemented in the managed pools that we launched, we've implemented a circuit breaker where we tie the circuit breaker to the book value of the underlying asset. So you can have a situation basically where a whale pushes down the price tremendously below the book value and scoop up real estate tokens for cheap. This is a guarantee that we need to make to our clients, the issuer of the token, in order for them to feel safe to actually list it on an exchange. This is not a problem for the order book because obviously in there you have a bit more control where you can only accept the orders that are above book value and you're willing to accept. But for the AMM with instant finality, the swap happens instantly. Then it's an issue if you don't have a circuit breaker and there's a whale that manipulates the price down. So that's why we chose Balancer. If Uniswap particularly opens up a similar functionality, similar pools, we are more than happy to talk to them again, for sure.
Brilliant. Perfect answer, Mark, and very detailed. Much appreciated. And there are some additional questions for you, but we're out of time with you, but we'll make sure that those questions make their way over to you and you can answer them to everyone individually. So thanks very much, Mark. And we'll now move on to our next speaker, which is Evangelos, who is the SVP, the Senior Vice President of ATS Services at Oasis Pro Markets. His core capabilities include new product development, trading platforms, technology, and project management. He has a successful track record of introducing new products, platforms, and programs that drove profitable growth and improved customer engagement and value for companies such as Bank of America, JP Morgan Chase, and Gain Capital. Evangelos is a Series 7 General Securities representative and a licensed real estate salesperson in the state of New Jersey. And there he is, loud and proud on the screen. Over to you, Evangelos.
Yeah, thanks, Tom. And very nicely done, Mark. Obviously, based on the introduction, your story truly resonates with me. Not only am I a Series 7 registered representative with FINRA, but also heavily involved in the real estate space. So, recognizing real estate practitioners really being behind the 8 ball on embracing technology. I think what you're doing there with realestate.exchange is great, and picking up on that, with real estate agents and brokers and developers is going to be a huge opportunity there. So before I get into the presentation on Oasis Pro Markets, want to thank Klaus and the DigiShares team. Thank you for having us. You're a great partner. And we look forward to working with you in the future. So let me jump right in about Oasis Pro Markets. So just quickly running through the mission of Oasis Pro Markets, which is to bridge the world of traditional finance and blockchain to become the leading global multi-asset trading infrastructure solution for public and private digital asset securities for digital cash. So we are a FINRA regulated broker dealer. We are an SEC registered alternative trading system. And from that perspective, Oasis Pro Markets has been regulatory and compliant forward in ensuring that what we build in this space, in the digital security space, has the proper guardrails in place. And although it was definitely a heavy lift to get to this point, it's something that I think we'll probably get into more discussions later, but something that is definitely a feather in our cap. And some of the my fellow panelists that also happen to have similar type licenses that we have in the US, as the regulatory environment evolves. So looking forward to more of those discussions later. So, key Oasis Pro capabilities, so global market model, trusted partners in this space across various verticals. We have relationships in the RMBS space, ABS, and we recognize that other verticals offer great opportunity, like venture capital and private equity and even collectibles. I think at this point in time, still early days in digital securities, and we at the moment want to be open to participating in many of these verticals. So we also have industrial strength APIs to enable co-brand and white label solutions connected to OPM's primary and secondary digital asset securities ecosystem. What does that mean? That means that we are all about empowering our partners, whether those are other broker dealers or maybe other companies that are across some of the verticals I mentioned before. We recognize that the B2B model or B2C model is quite important, because you have distribution, you have buy side and sell side coming from a lot of these partnerships. So how do we empower or enable our partners to participate in the digital security space in a regulatory and compliant way? For example, another broker dealer can leverage our APIs to build capabilities into their existing ecosystem. This has been what Oasis Pro Markets has been pursuing for some time, and we also recognize that a lot of our peers in the industry also see this as a great opportunity. So it looks like the ecosystem is moving more in that direction. We have a primary issuance marketplace, very akin to what you've seen in crowdfunding. You log into the platform, you can see different deals or offerings that are presented by various issuers. That is our or what we call Oasis Pro Markets Direct. But as I mentioned earlier, it could also be doing that for the benefit of a broker dealer, where they'll have their own customers there, or for the benefit of other companies where they may want to have a walled garden with their particular investors transacting on these deals for primary issuance, where they're doing fundraising, or through the ATS, which Oasis is approved for trading on the secondary market. So what was mentioned earlier by Mark was the AMM, and then the central limit order book, and then pursuing central limit order book out of the gate, but then that expanding in the future. That's what Oasis Pro Markets has, a central limit order book with matching engine. And I'll just show you a glimpse of our direct offering. But like I said earlier, these capabilities can also build out more bespoke for depending on who the customer is, or the other partner of ours on the other end. In addition to the points I mentioned, we are also full service investment bank. Our founders have vast experiences in investment banking and M&A deals. So we are also able to handle these types of functions through our regulated entities. We recently got SOC 2 Type 1 and moving forward to SOC 2 Type 2, obviously very important to have these as we build out more capabilities, as we look to expand our reach to more larger size global institutions. This becomes more of a must-have for being able to interact and work with them. Moving on to some of the advantages of digital securities. Obviously, the three pillars that I always highlight are liquidity, efficiency, and transparency. With regards to liquidity, historically, a lot of the assets that are offered, like real estate, which is a prime example, have historically only been available to an audience with much more money, and those that are those capabilities now can be extended for more fractional tokenized real estate and other assets to a much larger audience. So we do this through leveraging the power of tokenization and smart contracts and blockchain technology. We also have through the FINRA regulated broker dealer an onboarding process for bringing on accredited and institutional investors. Oasis Pro Markets also does have the ability through our licenses to onboard retail, but I would say that's less so of our main area of interest, just because of some of the reasons I had mentioned earlier on the prior slide, and building these partnerships with larger size institutions. And we do have really great partnerships there with the likes of Jumio, Chainalysis, and others that help us to ensure that those that onboard onto our platform are trusted. There hasn't been any nefarious activities in their wallets, or they're not associated with any of that, in which case we're able to onboard them. And then there's a continuous review to ensure that that hasn't changed. And then not only onboarding of the subscriber side, but also onboarding of the issuers. We try and make it as seamless as possible. Nonetheless, recognizing that there's a lot of information that needs to be gathered from issuers in order for us to be comfortable and ensure that the offerings that they bring to either our marketplace or our ATS or both are vetted, and there's the proper level of due diligence conducted there. So here we'll just touch on the primary marketplace, and this is, again, as I mentioned earlier, for the fundraising side of things. This is where issuers bring deals to the platform. The subscribers that either are on Oasis Pro Markets Direct, or again could be via a walled garden approach where they're just accessing their own client base, can transact. This is an overview of what the primary marketplace looks like, at least what we call the offering details page. But we are, as I mentioned earlier, multi-asset. That isn't an easy task, because a lot of these different asset types have a very bespoke nature to what they do. But we can handle ABSs, RMBSs, CMBSs, equity, other structure type products, ETFs, BTFs, and SEC registered funds, and of course, mentioned earlier was real estate. So key to Oasis Pro Markets is the partnerships that we have with other broker dealers, other large institutional players, and being able to work together to build out the ecosystem as this is all coming to fruition. The ATS, although I'm showing you a screen of what the ATS looks like for Oasis Pro Markets Direct, this is all modular and customizable. And as I mentioned earlier, when we're dealing with other institutions and partners, from their standpoint, it could be more about leveraging our APIs. On the ATS side, we have both fix and REST APIs. So we found that to be important depending on the institutions or partners that we're working with on the other side. But much like some of our peers on this call that are in the ATS space, we also cover Reg A deals, Reg D. We can do CF. I would say it's not core to Oasis Pro Markets. Reg S, Rule 144, 144A, and Rule 701. So the one differentiator that we see, and we believe we may be the only ATS in the US, is the ability to settle digital securities for digital cash. Now that brings more real-time settlement rather than having to deal with the fiat leg of the transaction, and that can be powerful depending on the asset type. I would say less so for real estate type transactions, but nonetheless, when you think about the more real-time nature or almost atomic nature of the transaction, you do limit counterparty risk. So that's also important. So yeah, I guess I touched on a lot of these points throughout the discussion, but white labeling. I mean, we have Oasis Pro Markets Direct, which is our branded solution, following compliance and regulatory guidelines, and ensuring that everything is buttoned up from that perspective. There are opportunities for co-brand. There are opportunities for white labeling. Like I said earlier, we're also seeing a lot of our peers in the space moving towards that direction, and we think it makes a lot of sense. So what I've listed here is your head, our body. You maintain the look and feel consistent with your existing applications. We can support the back-end applications both from a technical and operational perspective. And this enables direct contact with customers, no disintermediation. Essentially, if the partner so chooses, they can have their own walled garden, and then it would just be their investors participating, or they can open that up to a much larger audience of subscribers. Yeah, so the bespoke white labeled integration, an out-of-the-box solution for those that may not necessarily have currently their own ecosystem or platforms, being able to enabling them through our platforms, that can be a value proposition for maybe not the largest institutions, because from their perspective they want to own the brand, but maybe from the more medium-sized or smaller type partners, where they recognize that they can participate in the capabilities that Oasis Pro Markets has. So Again, different flavors, the bespoke nature of what we do, and the openness being modular. We've seen that being very important to those that we're working with in the space. So yeah, want to conclude it there, and just obviously flip over to the contact information. I know we'll have a Q&A towards the tail end of these discussions, but also you have contact information here. And in order to get in touch with me, it's pretty easy. It's Evangelos at oasispromarkets.com. So again, thanks for the opportunity. I will stop sharing my screen now. And Tom, I can turn it back over to you.
Brilliant. Thanks, Evangelos. And yeah, we'll have more Q&A later, but quick question I see to come in here, and quickly fire it at you whilst you're still here. It's a, can you tell us? So hopefully the answer isn't just a straight no. It says, can you tell us what your volumes are currently in terms of number of assets listed or traded and transaction volumes?
Yeah, there's really not much on either the marketplace or the ATS at this juncture. I think more importantly, we're looking at it from the standpoint of bringing in partnerships. The partnerships are going to bring both buy side and sell side. Through those relationships, we expect we expect that to be the source, and it's not going to come overnight. I mean, if you look at our peers in the industry, I think we're all much in the same place. There aren't that many offerings out there, but we'll get into discussions on how I think we can build this ecosystem more so probably later on.
Perfect. Good stuff. Brilliant. Well, thanks very much, Evangelos, and we'll move on to our next speaker, who is Bob. Bob, who currently serves as the Vice President of Capital Markets at INX, where he oversees the running of INX's trading platforms, on which institutional and retail investors are trading cryptocurrencies and regulated security tokens. He joined the crypto exchange back in 2021 as head of operations, coming from broker neutral technology firm FlexTrade, where he worked as head of production support for nearly 2 years. There, he had hands-on experience of a product suite that offers access to market data providers and order management systems. FlexTrade's OMS solution can also be tailored for global access to broker algorithms, as well as the ability to build proprietary algorithms themselves. Bob, hope you're well. It's been a while since October. We saw you at the Security Token conference in Munich. I'll hand over to you. Take it away.
Thanks, Tom. Good to see you again. So first of all, thank you to Klaus and DigiShares for putting this together. There's nothing more powerful than collaboration. I come from the school of thought that 1 + 1 can equal 3, and that's what we're doing here. And this is really great to see all of my co-panelists, some of whom I've spoken to at some point or the other. I'm the VP of Capital Markets here at INX, and that means I literally am building the pipeline. I'm speaking to sometimes over a dozen companies in a week who are interested in tokenizing, many of whom have come to us by themselves, not because they've reacted to an advert or been referred to us, simply because the concept of tokenization, things like the hashtag tokenizing, everything, or RWA, real world assets, these things are trending, and tokenization is becoming a more mainstream concept in 2023, which is great. So these various industry verticals are looking at how tokenization might enable their space or potentially disrupt their space. And obviously they need to stay ahead of the curve. So it's really great to see that the industries out there are becoming more aware and reaching out to firms like INX and probably to some of my peers on here to discuss how to take advantage and how to position themselves. My career started in around 2005. I worked at a FTSE 100 ICAP PLC. There, I built market surveillance applications. I had a couple of global heads of operational roles. I also worked in digital transformation over the years in startups and growing up firms, and typically sat between the technology and the business, and kind of bridged both. So I have a fairly good understanding of how, you know, technology can be a business enabler and how business needs to leverage, you know, the power of technology many times to thrive. In 2017, an ex-colleague introduced me to crypto and said, hey, you know, well, not introduced, but basically kind of got me over the line and said, sign up to one of these platforms and have a look. So I kind of did this deep dive into crypto at the time. And I remember that the white paper concept was so, you know, everyone was talking about white papers. And have you read this white paper? I'm going to send you that white paper. And I realized these were just, you know, these were capital raises, right, that were just happening in Telegram groups or WhatsApp groups. And I remember a specific incident where I thought, this is just crazy. What? So we're just going to send money to this thing and what? Don't even know who the team is. It's a DAO. What is a DAO? Decentralized Anonymous. Like, it was just crazy to me at the time. And little did I know that, you know, exactly at that time, the founder of INX, Shai Datika, he was looking at the market in the same way. And he was like, we need to be able to offer an ICO-like solution, or, you know, an IPO for retail, but it needs to be done, you know, by the book. It needs to be done with the same regulatory guardrails that have existed since, you know, the Investment Act and the Securities Acts of 1933 and 1940, right? And so he put together a team working with EY and a few other law firms and approached the SEC and said, you know, I want to launch an IPO. I want to raise, you know, capital to build out this digital assets listing and trading marketplace, leveraging blockchain technology. I want to do the IPO on the blockchain and demonstrate that it's possible. And I think this was intriguing to the SEC at the time. And so they literally worked with INX, as you would expect, on an IPO. And we created this 170-page prospectus, which included things like, you know, how we would manage wallets if, you know, if the token holder had lost the keys to their wallets. You know, the SEC was very interested in how would you do that? How would you recover those tokens? If someone lost a pay-per-share certificate, you know, they could contact someone at their broker and they can get that reissued. How would you do that on the blockchain? So at the time, ERC 1404 came out and specifically, you know, catered to these types of needs, the security token needs. And so we worked hand in hand for just under 3 years with the SEC. And, you know, the whole premise of INX, the whole DNA was we're going to do things in a regulatory compliant manner. And if that means we're going to look boring in comparison to other, you know, digital asset firms that are just running wild, then, you know, so be it. Because we believe that at some point, you know, there will be a day of reckoning. And last year we had many days of reckoning. So in 2020, 3 years after the ICO bubble, INX was granted the approval to start its full F1 prospectus IPO. This was when I came on board to INX. Now, just sharing my slide deck here. So as I said, right, you know, the entire DNA is the regulation first. And just to kind of give you guys an idea of what it means to be regulated and what businesses might be looking for when they're selecting a tokenization partner, especially when they sometimes can't tell the difference between, you know, what is crypto versus what is security tokens. You know, we saw with FTX last year, no independent board of directors, for example. So I just want to highlight the importance of all of these different things, which are the way to do business the traditional way. And specifically on this slide, I just want to point out, you know, David Wield, who's the chairman of our board, and is also known as the father of the Jobs Act. And this is very relevant to the space of security tokens because the filing exemptions that issuers of security tokens most likely want to use, things like Reg S and Reg D filings, were things that David Wild was instrumental in presenting, legislation to Congress in the Obama administration that actually led to these easier pathways for small cap companies to raise capital and not to miss out on the opportunities for them to tap into retail. So David Wild is instrumental in that space. And so just to highlight kind of the experience that, we have within our board. So forgive the not so pretty look of this slide, but then again, this is licensing, it's not the prettiest topic. But we basically amassed, let's call it an arsenal of licenses that allow us to offer a full end-to-end digital, assets marketplace. So whether it's the state money transmitter licenses or the FinCEN MSB license, which apply to crypto trading, or the SEC and the FINRA licenses that apply on the, where we're a broker dealer, we're a transfer agent, we're licensed to run an ATS and regularly have interactions with the SEC and with FINRA. This is key. And I think as Evangelos was saying just now, it's arduous, it's not trivial, but then again, there's a reason these things are difficult, because you kind of have to demonstrate, the way you're going to safeguard customer information, the way you're going to protect customers' trading positions, and so on and so forth. So it is really important that firms seek out tokenization partners that have clear, licensing licenses. So again, summarizing who we are: a broker dealer, an ATS. Which in fact the INX ATS, I believe, was the first one to trade a digital, do a digital security trade, the money transmitter licenses. We're also SOC 2 Type 2 compliant. We work with BitGo Trust, who is our custody partner. We're very shortly going to announce something around segregation of client funds. And also INX maintains a 36 million fund just to safeguard investors. So kind of like an insurance policy type of thing there. So we got the approval from the SEC to raise via an IPO. This was in August of 2020. And this is when I joined INX to help with this raise and to start putting the operational footprint in place. Especially as it became very clear within a very short space of time that INX was going to do very good with this raise. So it was clear that business was going to start somewhere in the early 2021. And so I came in and working with and hiring people. And we basically, between 2020 and April 21, we raised $86 million from retail, from 7,200 retail investors around the world, and not just small percentages from non-US, from countries outside the US. We literally had big chunks of investment coming in from many countries around the world. Japan was very big, for example, and this basically proved the model. Now, granted, the timing couldn't have been better because this was in the last bull run. This was basically, DeFi summer, and it was all getting crazy with crypto back, if you remember back then. So we did we really succeeded, I think, in proving that, with the right groundwork and with the right marketing, and this is key, the marketing part, the right investor outreach. If you can drum up the right, access the right communities and the right investor crowd, and share your vision and and have a prospectus that clearly states, what the funds that are being raised will be used for, how the team, what the vision is, you can raise capital from retail. So we with the proceeds of the raise, we acquired the licenses that I showed on the previous slide, and we started building our platform. We acquired a broker dealer and the ATS and so on, and we acquired their architecture, which we then proceeded to merge and move over to ours. And we launched INX One, and I have a couple of slides that show the platform. in a second. But we're now at a point where we've proven the model. Okay, I want to say we wrote the book on tokenization or raising capital. And this book is, by the way, available. Some of the information I'm sharing here is documented in it. It includes various use cases for tokens, very interesting ones that are not immediately obvious. And now with this experience, we are now helping companies out there to create their own security token offerings, to structure their own raises. We're guiding them as to, what a PPM, what a private placement, memorandum and an investor prospectus should look like, and maybe introducing them to legal firms that are active in this space. We're working with them on what their tokenomics could look like, helping them decide if they want to tokenize equity in their company or if they want to do maybe more of a rev share model. And the idea being that INX has all of the ancillary services, from the broker dealer to the minting and the distribution of the tokens, to the transfer agent that maintains the cap table, all the way through to the ATS, where they can then list that token for trading, and we continue to manage the cap table and so on and so forth. And also, again, speaking about marketing, making it clear to these companies that when you come to an INX, and maybe some of the peers on this panel have experienced this, we're not a distribution network. We're not underwriting your raise. Rather, we're providing all of the infrastructure and the rails, but you need to do marketing. You need to have a clear idea where your likely investor resides, what groups and communities they hang out in, or what marketing and investor outreach firms you want to engage to drum up support and for your raise. Now, obviously, every time a new raise happens on INX, and right now there are 5 live raises with a 6th coming on very soon, each raise brings on more community, right? So there's people who are following these projects, these companies, and once they understand that there's an opportunity for them to invest via INX, they then come into the INX, call it community of communities. They sign up to the platform, they join our Telegram group, and each of these companies who are doing their raises, they have their Telegram groups. And so you kind of have this growing ecosystem now where, even though we're not able to commit in any way, shape, or form that, X% of a raise might come from this community, the idea is, as we grow over time and as we expand this community, that certain percentages, of these raises should start coming out of our community. So the distribution is key. It's not just about the deal flow and bringing in the exciting companies that want to raise. It's also making sure that the retail investor crowd keeps growing, that we have the success stories and the use cases, and that we start to look for the institutional investors as well. And I'm sure we'll talk about, some of the challenges and the hurdles that we need to cross over to get to that point. So now all of this history starting in 2017, we're starting to see this year some very clear language coming from some of the big players in the financial markets. We all know about the BCG report, and Larry Fink recently, talking about their focus on tokenization of securities. But we've also seen, many more of these guys coming into the marketplace and or declaring that they're in the marketplace. And we know that some of these large firms have very active blockchain, digital asset R&D teams or research teams, and are running pilots. And there's a whole bunch of pilots that have happened. And if you dive into this space, you'll see that there's a lot more than this very short list that I have on this slide of major financial companies, banks, non-banks, funds, you name it, and even corporates like Siemens AG in Germany, who are very much clear that tokenization is here to stay. It's in its infancy, but they're very much positioning themselves whether it's through capital markets or just kind of enterprise blockchain use cases behind the scenes. So make no mistake, the concept of tokenization is becoming more and more ubiquitous within some of these large firms, and is really important for us on this panel to make sure that retail doesn't get left behind. Retail gets to participate in this new economy, and I think that's what we're doing. When we speak to companies and we kind of take them through the process, we like to call it a white glove service, whereby we understand it can be daunting, it can be challenging to grasp the entire life cycle of a security token offering. We recognize the fact that as one of the industry, as one of the few firms growing this space, it is important that we go out of our way to handhold these clients through the process. And so my team is very much available, and we space out the way we schedule our day so that we're speaking to, whether it's companies on the West Coast or companies in Europe or even in Asia, that we're able to really dedicate time to them and make sure they understand, INX will be here to support you and to guide you throughout the process and not leave you leave you hanging there. This slide just talks about the filing exemptions. When I at the start of my talk, I mentioned how David Will kind of made this possible through the Jobs Act. So Reg D, 506B, 506C, Reg S, Reg A, a full IPO prospectus. These are the pathways that INX can guide companies in how they raise capital. And some of them are nuanced, and this is where we basically go into the detail. And by the way, this table is in that book, in that ebook. And this is just a reminder again of the responsibility we have to educate, potential clients and other entities coming into this space. So today we have INX 1. Despite the fact that there are different licenses, different partner banks, different, call it asset types in the background, security tokens, cryptocurrencies, stable coins, different licensing and regulatory requirements, we've merged all of this into one clean, seamless, UI, where users onboard once, they can opt in to having both the crypto and the securities exchange, and basically have this kind of seamless experience where they can then, potentially on-ramp with Bitcoin, convert the Bitcoin into fiat, hit a transfer button and move that fiat over to the securities platform. And all of this just happening with a couple of mouse clicks in a few seconds. Or they can access the primary offerings marketplace, where, as I said, we have 5 raises that are live right now. And in general, this is kind of like what the platform looks like. Speaking about the raises, one of them, we hit a milestone recently whereby TruckPal, a logistics and freight-based a company operating in China, was actually able to, has become cash flow positive and announced a dividend. And we distributed that dividend on the blockchain via USDC, the Circle stablecoin. And it was the most seamless experience for the issuer, in the sense that all they had to do was transfer that, the amount that was being distributed to a wallet of our designation, and we took care of the rest and distributed the USDC into the digital wallets of all of those, all of the investors. So we have, come full circle, gone through the motions, the challenges, the struggles, but we've made sure we've done it the right way. We have sometimes appeared boring in comparison to some of the other platforms out there, speaking more on the crypto side, but we knew that there was going to be that reckoning, which was last year. This has to be a regulated space. And we've acquired all of these assets and built our platform, and we can now sell. And as I said at the start, the number of companies that are coming to us on a regular basis, it just shows that the industries out there are starting to look at tokenization. So once again, thanks for having me. Thank you to DigiShares for making this happen, because this is how we basically get the word out there. This is how we promote this industry. So over to you, Tom.
Brilliant, Bob. Thanks very much. Describe yourselves a boring company, maybe, but certainly not a boring presentation. Just enjoying sitting back and learning that. That was excellent. And as we've gone a little bit over time, we'll park some of the questions that have come in for you, and we'll get them sent to you directly, or we'll come on to them at the Q&A at the end. But we've still got three speakers to get through before we get to the fireside chat. So I want to make sure that Leanne and Ryan and Massimo will get their allotted time as well. So we'll next be going to Leanne, who has over 20 years experience in capital markets globally in both middle office and front office / commercial roles. Over her career, she has worked for leading technology vendors, exchanges and brokerages, including NYSE, TMX, TD Securities and ICAP. Before joining Archax 3 years ago, Leanne consulted with disruptive fintech startups, focusing on capital markets solutions. And certainly here at the Tokenizer, we've been aware of and speaking with Archax for going back 4 years or so. It's always been very interesting to see how they've been developing. So Leanne, we'll head over to you.
Thanks very much for having me. Really happy to be here, and thanks for the kind introduction. First, I'm going to give a very high-level overview of our services and ecosystems, set the stage to discuss how we're building in a way that will ultimately attract liquidity to our secondary market, which of course is the topic today. I think, bear with me, because I think the exchanges that have joined today, a lot of us are doing very similar things. I think we're all of the same mindset, but obviously being in different jurisdictions, as well as targeting maybe different audiences, we all have something slightly different to say. And I hope as the industry evolves, we'll get to work closer together, which I think is part of our fireside chat later on. So first, I wanted to, as I said, give an overview of Archax. Archax is the first and remains the only FCA-regulated digital securities exchange, which is our flagship secondary market. We're also a custodian and a broker. Our custodian also holds extra permissions which allow us to custody securities trading on a secondary venue. And I think that's really important against some of the other security token custodians in the region. And we're also a broker where we run our primary market. Although we're champions of the digital tokenized world, we can also offer services for traditionally created securities within the same infrastructure. For security tokens, today we don't facilitate on-chain trading or settlement, but that will evolve over time, and we're developing solutions to support this in pace with the broader market structure evolution. Today, our ecosystem allows us to be chain agnostic and integrate into traditional institutional workflows. Most traditional exchanges don't have a custodian within their ecosystem, so this allows other benefits such as instant settlement. We're actually a settlement internalizer with the Bank of England. We're building a bulletin board as a junior secondary market to our main MTF to help better support the type of tokenized securities that are the first movers, if you will. We have our CAS permissions, which here in the UK is regulation rules to protect clients and assets under custody, including cash. We have built a tokenization platform, and we're building out a fund platform to support our strategic investor, Aberdeen, as well as other tier 1 funds expressing interest to work with us on projects. What I'm going to talk about are some of the more specific things we are doing and putting in place to given our permissions and ecosystem to attract interest and liquidity to our institutional grade secondary market. First, some of the challenges to liquidity. So regulation in the UK, like most jurisdictions, we face a few challenges, and that is probably more than a few. But today I want to focus on something that's actually not regulation, but actually affects regulated brokers here in the UK. And that is the Crypto Asset Register, which is part of the 5 MLD anti-money laundering directives. It was put in place to protect clients of crypto venues, and so exchanges and custodians that are unregulated, and rightly so. It's a very difficult register to get on. There's been a lot of hurdles for a lot of companies here in the UK because it put a very high standard on anti-money laundering procedures and processes. We got on it, we were the first onto it. But over time, since we received our FCA permissions, the regulator has come out and said that all FCA regulated brokers who transact on a secondary market on behalf of clients need to be on this crypto asset register, which is absolutely, it's very a difficult pill to swallow, particularly for us, and it does affect ultimately liquidity. If an FCA regulated broker is FCA regulated, then they will have the highest level of KYC AML. And so for them to go through this expensive and timely process is prohibitive. So I'll come on to some of the solutions in a bit. But the next challenge is traditional security liquidity providers have little interest at the moment, with the lion's share of issuances being early stage companies and no real arbitrage opportunities, which ultimately means it's hard for them to make money. So that is a hurdle for liquidity. The next one is firms are slower to issue securities in token form. Investors are still not understanding the benefits. One of the things I always like to say, one benefit, easy to understand when we're talking to issuers considering issuing security tokens for an equity private sale, is that I'd much rather prefer to have my share ownership custody in Archax's FCA regulated custodian in token form than versus being on a certificate emailed to me. And rightly so, investors wonder where liquidity will come from. Today, many firms issuing tokens are very early stage blockchain companies, as I said, but actually with an ecosystem like Archax and what we've built, liquidity could actually be better for them in that particular scenario. And I guess the last challenge I want to talk about today, I mean, there's many more, but these are kind of the ones around liquidity, is the cross-exchange jurisdictional interoperability. It always seems to be a topic at all of the events and a lot of seminars and webinars, and it is very topical around liquidity. So I'll talk a little bit about what we're doing to solve that problem in the future. Looking at the solutions supporting liquidity, all within the Archax ecosystem. So the one I would first say is that government lobbying. So in talking about the registration that the FCA regulated brokers have to be on in order to be members of our security tokens exchange, we are out at the Houses of Commons in front of lords and ladies quite often trying to talk about some of the I guess questionable choices that they've made, which are assaulting a lot of innovation in the UK, not just within security tokens. So if anyone after wants to go onto our website and look under the news, we've got an interesting little video called Making the UK a Global Digital Hub. And it talks a little bit about some of the regulatory problems that are affecting not only driving liquidity and helping this new way of market infrastructure move forward, but a number of different things around the UK being an innovation, a center for innovation. So I guess the next thing is that one of the solutions is Archax has built the main secondary market on a central limit order book. And I know, I guess some of my peers and the other exchanges have talked about that. And the other thing is that we also received our actual exchange regulatory permissions, and so that's as an MTF. So there's 3 regulatory exchange permissions here in the UK, and so one of them is an MTF, which is a multilateral trading facility. We did this for institutional adoption. The way we built the platform integrates in traditional workflow, which is key. Well, the current market infrastructure transforms over time to integrate blockchain into the overall market infrastructure. We have our own front-end GUI, and our APIs allow for institutions to use their own OMSs and EMSs. This makes it easier for them to participate. The next solution is creating interesting products for institutions and to attract institutional participation to the exchange. So the first is tier 1 asset managers would like to create tokenized feeder funds, among other things, that can be traded on one of our 2 secondary markets. One is our bulletin board, and the second is the full MTF, whichever makes more sense. And that will, we're working with Aberdeen on that, as well as other tier 1 asset managers. Next is tokenization of existing trading equities such as Vodafone and Apple, allowing for 24/7 trading of the security. And we're going to be using our tokenization engine that we built to offer those securities on our MTF. UK gilts we're looking at tokenizing, and then some proprietary Archax products, such as a secured staking beneficial ownership token. And I really don't know how to explain that, but one of our divisions is creating it. And again, all of these products are to bring institutions to the market, which again helps to drive liquidity. Also, we're offering exchange traded products. They'll first be a traditionally created product, but they'll have crypto as the underlying asset. So this will allow institutions to have exposure to crypto without having to have it on their balance sheet. Archax could also bring a one-stop shop full runway to SME issuers with top protection for investors. Our broker permissions offer a place to raise money, and all, as I mentioned, all protected by our CAS permissions. We can create the security in token form via our token platform, custody it in an insolvent remote way via our custody solution, and then liquidity first on the junior secondary bulletin board, which then an issuer can graduate to the full MTF when the time is right, with it all within our own ecosystem and our own permissions. This is a place where investors can feel safe putting their money into and not have to worry. Hopefully this will mean more issuers look to tokenization and more investors feel safe. We also have the flexibility to partner with others in the ecosystem if that better suits an issuer. The more SMEs raising money via security token, the more investors in the ecosystem, creating the potential for liquidity for the secondary market. As mentioned, we can offer both traditional and token versions of security. All investors initially if investors initially want to onboard to trade traditional securities, which we will offer, they'll be able to see the security token offerings. And as long as they have the right permissions, they can access and trade those security token issuances. In fact, on the central limit order book, the instruments look exactly the same. They are market depth in fiat, and the instrument has an instrument ID indicator. So, and why wouldn't they? Because they're all actually securities. An investor needs to look at an instrument detail or the documents to see that they're created in token form. Given today our admitted securities are not traded on chain, only when the investor wants to take the asset out of our ecosystem do they need a wallet if they bought a security in the token version. Therefore, if traditionally created securities are more interesting to participants, that's absolutely fine. This is a great way to get them onboarded and get the tokenized securities in front of them, again, creating liquidity for tokenized securities. The last thing I wanted to talk about was our digitally native CSD, and a CSD being a central securities depository, like in the US DTCC, and here in the UK, Euroclear. Montes is something that we're building as a separate subsidiary. And as I mentioned, interoperability between blockchains and global borders create barriers. We're building a digitally native central securities depository to be regulated in Luxembourg. For Archax, we will connect our MTF in and start to record trades on chain. Also, Montes will connect to other custodians, other issuers and brokers globally, of course, when they can, with regulation and over time, to build a platform for the golden source of truth of ownership on chain. Also, it's being built to be chain agnostic. And so hopefully this interconnectivity of venues, brokers, issuers will help bring the ecosystem closer together and drive towards global liquidity. This will take some time for sure, but we're starting to build the building blocks to make that happen in time. What I haven't spoken about is our unregulated venue that we've also built. So for cryptocurrency to start, it's all accessible via the same front-end GUI as the regulated market. So those active crypto participants that have the right permissions to trade securities can see what's available. not to put this last slide on, because you probably can't see it, but it really is just talking about our whole infrastructure. The more issuers and interesting issuances and products that I've spoken about that we can bring on board means more participants coming to the exchange, which ultimately means added liquidity, which was, again, the topic of this conversation. Now, I know a lot of the speakers today have talked a lot more about their full exchange offering. I'm very happy to do that. I know Klaus and the team can provide my details after the call. What I really wanted to do was talk about this driving of liquidity to the secondary market today in today's presentation. And really sorry that I couldn't get the slides to work. I don't know what's happened on my laptop, but it's kind of covered up all the functionality of my PowerPoint.
No worries.
Thank you very much, everybody, and I hope it was clear without the slides.
No worries, Dan. Thanks very much for the presentation. I'm sure there'll be opportunity to share the slides with the participants after if need be, so they could probably get a better look at it if need be. We're going to crack straight on with the next speaker, who is Ryan Zega, who's a Senior Director of Business Development and Capital Markets at tZero, and works on the primary raise, secondary trading, and tokenization efforts at the firm. Ryan has an extensive institutional real estate background, including acquisitions, asset management, and debt origination. And there's a much longer bio which I could go into, but as we're running a little late, I'll head straight to you, Ryan. And the presentation looks up and ready, so take it away.
Yeah, definitely. Thanks, Tom. And then Klaus, thank you for having us today. I'll keep my presentation brief so we could have some time for a Q&A at the end of this call. But as Tom stated, my name is Ryan Zega. Similar to a number of the other issuers on this platforms, basically I have a very traditional institutional real estate background. And then here at tZero, we provide an end-to-end solution for private market participants who are looking to raise capital, tokenize, and then trade within our secondary trading environment. The big update on the tZero side was that last year we announced that the Intercontinental Exchange, who's the parent company of the New York Stock Exchange, took down the bulk of our latest capital raise, and has essentially molded us into something akin to like the private markets arm of the New York Stock Exchange, where we not only provide secondary trading solutions, which has been our main focus historically, where we operate an alternative trading system, have a retail broker dealer, and then facilitate the secondary trading of these digital securities. So these digital securities could be private companies, real estate assets, funds, generally anything that was typically very illiquid and high barrier to entry. We're democratizing access through a regulatory compliant manner. Recently, we launched a series of primary raise solutions for Regulation A, Regulation D, and Regulation CF offerings. So that's a new way for us to, kind of focus on providing an end-to-end solution for groups that are looking to democratize access to these typically, high barrier to entry assets, and then hopefully transition them into one of our secondary trading environments. Kind of want to dig into that relationship with Intercontinental Exchange a bit more. Not only did they provide us with a very meaningful amount of capital to continue growing out our capabilities, but we also received some significant human leadership as well. So David Goon, who now serves as our Chief Executive Officer, was previously the Chief Strategy Officer of ICE. So he was at that firm for about 21 years, leading the acquisition of the New York Stock Exchange, and then also building out products and services across their 11 other global exchanges. He brought over as Chief Product Officer. We received a new Chief Technology Officer and Chief Operating Officer. So we kind of revamped the senior leadership team at tZero and are continuing to build out our capabilities. And when we think about our ecosystem, similar to some of the other participants on this panel discussion, we also operate in this hyper-regulated US-based sort of broker-dealer ecosystem. So we own the trading venue itself, which is a tZero ATS, and then we allow for non-accredited, accredited, and institutional investors to open accounts on our retail broker-dealer to essentially transact these digital securities. So with these digital securities, we currently operate on what's referred to as like a digitally enhanced security model, where there is some blockchain functionality, but it's really kind of acting in almost a carbon copy way. And then in the future, we hope to build out additional capabilities there. And then when we think about the participants that are participating in our ecosystem, again, we allow for non-accredited, accredited, and institutional investors to go through that KYC, AML, and sort of retail broker-dealer account opening processes. And that's eligible for both US-based investors and then from investors from about 42 different jurisdictions. So when we get liquidity and accessibility, basically it is through that hyper-regulated route of allowing for investors to come and participate within our ecosystem. Stepping back, we are also working on different flavors of secondary trading. So traditionally, we've been focused on that very public-like ATS environment, which has transacted a number of different securities historically, including private companies, real estate assets, and funds. And then we are working on different potential kind of closed ecosystem trading environments, white labeled environments, and then also one-off liquidity kind of environments. So think about it as a liquidity environment with certain cadence. So these are potential quarterly, monthly, semi-annual, and annual trading environments. So those are kind of things that we're working on in the background. When we think about pipeline, our pipeline is very diverse. We see everything from real estate assets, similar to some of the sponsors that were mentioned earlier on in this panel discussion. We have a number of different funds, private companies, and really the common theme with all of these groups is either providing accessibility and liquidity to their existing investors from a prior capital raise, or if they're going out for a new capital raise, looking to raise that in a more sort of like democratized manner. And with those primary raises, again, they can take the form of a Reg D, a Reg A, and a Reg CF. We work very closely with the issuer and their counsel to provide some high-level overviews and then, enter that issuer into our pipeline. So, overall, I would say over the past year, it's been definitely a build mode for tZero, where we, again, continue to be hyper-focused on our ATS secondary trading environment, and then continue to allow for different pathways to access that, whether these are prior capital raises that have taken place outside of the tZero ecosystem, or with the advent of our new primary raise solutions, essentially keeping it within that same ecosystem where a issuer would have a more seamless type of capital raising experience, basically starting out from that Reg D, Reg A, Reg CF offering, and then really kind of going into one of these secondary trading environments, obviously subject to whatever regulatory lockout periods and other nuances with who can trade a particular security. So yeah, at a high level, that's tZero. I could certainly pass it on to the next speaker. We could do a short Q&A session. Again, I want to be mindful of the tail end of this call.
That's great, Ryan. Thanks very much for nipping through all that. I think what we'll do is we'll skip any Q&As for now, and then so we've got the fireside chat, which we should still have over half an hour for, so there'll be plenty of opportunity for input there. But no, thanks for that presentation as well. So final presentation before we shoot to the fireside chat, it's Massimo Butti, who over the years worked for investment banks, prop trading firms, market makers, and exchanges with roles in trading product and market development, cooperating closely with buy-side and sell-side traders, analysts, and portfolio managers, as well as helping creating markets and strategies to support them. At SDX, he leads the equity team. He's dedicated to enhancing the funding process for private companies and improving the issuance, custody, and transfer of digital securities in SDX's regulated CSD. He's responsible for reinforcing the interaction and collaboration between equity investors and companies in the digital age. And prior to what he's currently doing, Massimo was 7 years at the London Stock Exchange, where he was head of equity derivatives markets and global account director, developing the group key strategic accounts. And there he is. Over to you, Massimo. Take it away.
Thank you very much, Tom, and thank you very much, the folks at DigiShares, for organizing this event. And thank you very much for all the previous speakers. In the past hour and a half, we've heard a lot about different solutions and different pain points that have been addressed by DLT technologies. There's very little left for me to add that is meaningful, really, because such a great panel of distinguished speakers have already said quite a lot of the things that I wanted to say, but certainly a lot of what we have heard today embodies a desire of the industry to create a real ecosystem around this technology and enabled by this technology. And an ecosystem, by definition, is not a greedy organization. It's actually a place where the tide, rising tide, lifts all the boats, and where, as Bob pointed out, the end result is of its parts. So as an FMI at SDX, we are incredibly conscious of that, and incredibly conscious of our role as an exchange, as a regulated exchange, and financial infrastructure provider that we fulfill in this global ecosystem. But just a few words about who we are, and then I have a couple of slides. And it was really one aspect that I would like to focus on specifically. But yeah, SDX, we are the digital arm of SIX Group, the Swiss financial exchange operators. We are the first regulated exchange and CSD to operate fully on a private chain. We offered an exchange and a custody solution for traditional assets, bonds, and equities. And also we have a licensed but unregulated offer in crypto, where we offer non-custodial staking and custody on ETH and BTC at the moment, but expanding rapidly. Our members are predominantly banks and banks in Switzerland, but few global banks as well are looking at taking membership to our exchange. We have started our activity in November 2021. We do have so far three products on our platform, 3 bonds and one equity-based product, for a total of about just south of $500 million in assets. These assets are tokenized and created in our platform and custody and put in custody into our central securities depository. But our focus has been predominantly over the last couple of years in starting to add value by using this technology and solve real problems in more at a practical level. So when we look at capital markets at the moment, and we look at the parts that are underserved by FMIs like ourselves, private markets clearly jump out. And also in private markets, one specific asset class jumps out, which is equities. So we have focused over the past 18 months in building up that capability with a specific target group in mind, issuers and companies from early stages all the way to pre-IPO, so from startups to later stage, that want to issue digital based securities, tokenized equity securities. Why do we want to do that? Because we think that there are, as we heard, opportunities for a massive functional and pickup, but also a great opportunity to create new network effects, create new liquidity, and also lower cost while doing that. So our principle is that there are two key elements in an ecosystem for private equities that drive very much everything, and one is secure and safe transfer, custody, and settlement, and the other one is the digital artifact that is created on the back of the existing securities, or the digital artifact that is created to help fundraising. We provide the back end, so all the post-trade capabilities for these private securities. We are looking to provide the pre-issuance and process that some of the previous speakers have highlighted is very important, and centers around very well-known problems like KYCs, due diligence, accreditation of investors. So we are building a whole ecosystem around this and a whole workflow around this to then drive issuance, primary issuance in our markets. And then we are also building secondary liquidity solutions to support that. So, but what these secondary liquidity solutions look like is I think the most important thing. And you know, I sketched out in a couple of slides what are the main elements that we are looking at when we are thinking about developing liquidity in these assets in an efficient way, because we can superimpose all the technology and all the workflows we have, but ultimately liquidity has to be pulled and expressed in a certain way. And DLT allows new ways to do that. And so I just wanted to talk about what we are seeing and some of the models that we are thinking of and working with. Some of them are known to some of the speakers today because we discuss it, and because we are looking to network our services and network our different capabilities. But for some of you out there, that might trigger some new thinking and some new ideas. But so the starting point of all this is DLT securities, and in this case, DLT equities. From day one, we are recommending Swiss companies from startup, from basically constitution, from the day of constitution forward, to allow in their articles the issuance of intermediated securities or the issuance of DLT-based securities under Swiss law. Why? Because the DLT allows and enables elements, and embodies in itself elements that then help driving liquidity. So private shares in DLT format can be used for seamless interbank settlements, for example, on a platform like ours, or as we heard, for public wallet solutions and self-custody. The important key here is building a workflow that is completely STP, so completely automated. And when we move away from the typical private placement, which is in dematerialized form in an Excel spreadsheet or even in paper form, this is very important. That contributes, in our opinion, to make companies more attractive, more investable, especially with institutional investors. Why? Because some of the processes, by having a standardized contract in a standardized security, some of the processes that are risky or expensive go away. So you moved into a more professionalized or professional way of raising money and contributing to that process. The other key point with DLT DLT securities that some of the previous speakers have touched upon is that these allow for programmable assets. So a lot of the processes can be automated and incorporated into the security itself. Things like standardized terms, transfer assignments, and comprehension rights can be embedded in smart contracts designs and in the asset definition and completely automated. So this is the base. This is where we start our thinking at SDX. This is what we've built and the attributes of the products that we have built. Then all this should and is starting to enhance secondary liquidity, and we think that this is the way that liquidity is going to be generated and facilitated. So strong automation and strong focus on creating securities in with certain attributes that are driving better chances to develop liquidity. So in our market design, we have a public market space with a central order book, a matching engine, classical continuous auction, and the possibility to include liquidity providers. But what we are doing at the moment is to connect, as I said, the centerpiece of our workflow, which is custody, to alternative liquidity providers. We don't think that we necessarily want to own the whole liquidity value chain. We are happy for that liquidity to be developed somewhere else. So we are looking to develop order-driven central order books and then support the transfer of the standardized contracts and connected through us through, at the moment, a centralized securities depository, a classical CSD, but in the very near future also in permission wallet solutions. When we look at the way liquidity is used and consumed by investors in private markets, one has to ask the question: does the model fit the needs of the companies? There is always this tension, especially with private companies, revolving around control, around stable capital. Some private issuers don't want necessarily secondary liquidity, or they don't want a central order book on their shares, and DLT allows for more flexibility to build alternative liquidity models. So these are a few of the models that we are looking at. Clearly, bulletin boards are the most basic way to express liquidity in private markets. Widely used, effective, yes, to a certain extent. We think they would be a lot more effective if they were connected to a post-trade backend where transfer, custody, and settlement can be standardized. We are looking at customized auction models where we put the market structure and the liquidity structure more in the hands of the issuing companies. So systems where the companies themselves can decide who sees what. There are a few companies out there who started experimenting with these models. Again, we think that there is a hell of a lot of benefits into standardizing the process and connecting it to a security layer, that on a CSD or on permission wallets. We are starting to see some hybrid primary secondary models emerging, also controlled by companies, where treasury shares are made continuously available in a secondary market through a small central order book or some order-driven systems. They allow for continued fundraising programs, and we are looking at some ways to standardize the settlement of these products. Clearly, they lend themselves very well to providing design liquidity for exits, for employee investment schemes, shares and option schemes. So we are looking at that as well. And then I think that, and this is where the whole industry is looking at, is DeFi and DXs. We've heard about the interplay of DXs with new type of or new assets out there, like real estate. We are looking at how we can solve certain tensions there, certain pain points also that DeFi creates. If there is no central order book, how do you perform price discovery? How do you organize a market around it? Should it be completely on? Should it be on public chain? And then with a sort of custody layer that is permissioned? Should it be pure P2P or run through traditional or central order books, but in a DX format? Is the company data supported by oracles? Do we bridge them into private chains for custody? These are all things that questions that we are asking ourselves, but also type of models that we see developing around liquidity in private assets. And all of this is down to the availability of DLT securities that automate a lot of these processes. But more importantly, as I said, I sound like a broken record, but they provide one essential piece here, which is safe transfer, custody, and settlement. How do we do it at the moment at SDX? Well, we have, as I said, developed a central order book. We are building a system to admit and connect some of these securities to external liquidity and independent liquidity venues. We have built a link to our traditional exchange where we can transfer digital native securities that are built and settled in our CSD into our traditional CSD. This is to basically facilitate access to liquidity and to settlement for institutions and clients of institutions who don't have developed yet a DLT capability. Another interesting thing is that we are seeing more and more interest from banks who are looking at syndicating deals and use the existing infrastructure to create digital securities, but use different distribution channels. As other of the companies that are on this webinar today, we are not broker dealers. We are an FMI, so we do not participate in the underwriting of issuance. But what we are doing, we are trying to provide services for external partners to also come into our platform and provide these services. So that's all from me, and I think I don't want to take any more time away from the Q&A.
Brilliant. Thanks very much, Massimo. And if I can invite all the all the panelists to switch their cameras back on, and we've got just under 30 minutes for general Q&A. If any of you want to answer, if you could raise your hand either physically or digitally, then I'll come to you. And for all the other participants out there, see there's approaching 100 of you still on the webinar. We've got a few questions on the Q&A already, but if anything pops up into your heads, please pop it on there straight away, and we'll get it across to everyone. So I'll just kick us all off with a question. I've obviously mentioned regulation always tends to pop up at some point, and we've certainly seen that in everyone's presentations today. But what are the key regulatory challenges when it comes to tokenizing assets for secondary markets? If anyone would want to have an initial stab at that one. Massimo, yes, virtual hand, and then we'll come to you after.
I'll go first. I think that the challenges are indeed about regulation, but a lot of the challenges are around corporate law. They are not, especially in Switzerland, they are not so much about financial regulation, but what companies can and cannot do when issuing, when raising capital and when issuing securities. So what we have designed so far is our processes that are very closely aligned to Swiss corporate law, DLT, the permission to issue DLT securities was made law 3 years ago, and we have and required, by the way, a change in the Code of Obligations in Switzerland. So it was quite heavy on the companies, but what we are doing, as I said, we are helping companies to design their articles of incorporation or change the article of incorporation. So the issuance on our markets is in line with all the articles of law.
Great, and Leanne, over to you.
I was going to say it is kind of driving the change at pace with what issuers and investors want. And I think what I mentioned, some of the blockers of between the regulator and the government not speaking and what they're setting as regulation. But one of the other interesting areas is in the UK, ownership cannot be recorded on chain yet. And I know there's a lot of change and talk around that. And so I know Luxembourg is a little bit further ahead, and that's why I mentioned our CSD, our digitally native CSD, being placed there to start, because they have better regulation around ownership on chain. And I think that prevents us from really embracing the true value of trading and bringing blockchain onto the secondary markets and moving away from the central limit order book, you know, and evolving the post-trade settlement aspects. So certain things like that need to change, and in order to really embrace DLT in secondary markets.
Ryan, over to you.
Yeah, it kind of echoes the same sentiment, right? Compliance is key. And then for the issuers that are looking to pursue a primary raise or secondary trading within our ecosystem, you know, there may be limited blockchain functionality. And then, you know, we are, you know, outlining different, you know, routes in the future to unlock more blockchain functionality. So kind of, you know, depends on what kind of flavor of not only primary raise or secondary trading, but also tokenization and issuers looking for, and then where that really slots into existing regulations.
Not sure if this is you know, purely kind of regulation, but you know, or maybe more sort of corporate law. When you're looking at doing a secondary listing, then it's important to understand how the primary raise or that original liquidity event happened, right? If there was a Series A or a seed round or something, under what jurisdiction did that happen? Has every investor signed a subscription agreement? And also, if you're looking to tokenize that equity, do you have to have agreement from, written agreement from every one of those shareholders that they're happy to have the tokenization? So these are some of the things that you'd have to work through. But again, not all of them are insurmountable. I think some of it just comes with it's just part of the challenges of growing this business. That is a particular use case that I've come across, and it's always helpful to have a company that has done things by the book and can show you, subscription agreements of all of the shareholders, dating back to however long.
Yeah, and I'd mimic a lot of what my peers, especially those here in the US, have mentioned. Obviously, the regulatory environment here in the US is front page news across across the spectrum. What defines a security? Ultimately, we need to follow the same processes that existed until we're told that those change. Of course, with the intention of including a wrapper from the standpoint of making these assets more digitally native, making them accessible for the liquidity, for the transparency, and ultimately, I think this benefits the regulators. Hopefully, they'll come around to recognizing that. And in the meantime, again, we're just dealing with the consequences of those shops that took maybe a different path, more akin to Wild West, and not following the straight and narrow. Whereas, we in the US and the likes of INX and tZero in the US, and sure the others in their local jurisdictions did follow proper protocol to get to where we are today. And like I said before, it was a heavy lift, so it wasn't easy, but we did follow the right path.
Leanne, did I see you wanted to come back in again?
Yeah, I was just going to say, we, even though I mentioned we're a settlement internalizer with the Bank of England and everything's fully funded, we still have to register everything at the CSD traditionally because of CSDR, and that's the regulation piece. And it's extra expense, it's extra time, and for no real requirement because we settle everything within our own ecosystem. So for foreign issuances coming in, it can cost another 70, 80 grand. To do that, and that's hence why we're building this digitally native CSD. But this is kind of some of the challenges regulations pose. We are trading things digitally, so is the CSD, but digital in a different definition of digital, and it creates sort of smoke and mirrors then, because then the tokens aren't really trading, and you're having to extract everything out of the smart contract. So these are some of the hurdles. Again, just building on what I said initially, to making moving away from these central limit order books that are not traded on chain or settled on chain or recorded on chain. And regulation really has a big part of that not being able to move forward, which we are all fighting for. And I just put the link in the chat around what we are doing with the UK government and the FCA to try to lobby some of these changes.
Brilliant. Yeah, thanks for sharing that in the chat as well. Yeah, I'm conscious this isn't a webinar on regulation, but we've gone down that route again. Surprise. But let's try and get a bit further back to liquidity and secondary markets. Again, although who knows, we'll probably end up talking about regulation again. But I've been involved in this space since 2019, and I think Bob certainly touched on the fact that doing things slowly can be boring, but isn't necessarily a bad thing. But obviously, security token liquidity has developed relatively slowly, and it'd just be interesting to get everyone's views individually on why that is, and kind of when we can expect to see the pace start to ramp up. So I don't know who would like to take that one on first. Evangelos?
Yeah, sure. So just quick sentiments from my side. I think for private market investments, alternatives, we can't expect hyperactive trading, right? We're not going to get to the same place where public equities, public cash equities are, and FX. It's just not sensible. What will drive, though, more trading in private markets are going to be marking these assets to market, and rather than we'll use real estate as a use case, rather than an appraisal occurring once a year or once every 2 years. There are ways to mark those assets and mark their values more real time. Even to the extent of using AI and machine learning and taking all this data that is applicable to a property and making it priced accordingly. And then that's the first point. And then secondly, and I've discussed it with Ryan and others as well. A rising tide lifts all boats. I think working together and building the ecosystem through interoperability, through the sharing of order books, this will benefit all of us. Listen, it's early days. We know that. We all recognize that. But working together through collaboration, I think, will be ultra beneficial to everybody.
Bob?
I think it's kind of hard to completely dislocate security tokens from the broader crypto market, right? Because, people talk security tokens, it's like, what is that? Oh, it's a kind of crypto, it's a kind of digital asset. It's a crypto thing. So if you kind of look at the security token within the context of the crypto market, there were always much shinier objects, right, in crypto. And those shinier objects have now created this massive state of caution, about these assets, and so I think there's just been that drag where, the overall crypto space being the enabler, the blockchain technology being the enabler, is also in a way acting as an Achilles heel right now, because, and I'm sure you guys see this all the time, you try to talk about security tokens, and sometimes the first question is, so is this crypto? Because if it is, maybe we'll just end the conversation, kind of thing. So I think generally the macroeconomic environment as well doesn't help right now. So, just from a timing point of view. And then to the previous point, the lack of regulatory clarity and this ongoing, you want to call it feud between, the SEC and some members of Congress and the CFTC trying to step in as well to gain some, to kind of, muscle in on this conversation, is just creating, it's like an excuse for smaller institutional clients potentially to not want to touch this space right now. So I think, I agree completely. This is a matter of time. It's early days, and some of these recent, happenings have to kind of just drift a little bit into history now, and then we can, we can move much quicker.
Good stuff, Mark.
Yeah, I agree with all that, by the way, guys. But just to add to it in terms of how this space will evolve, in general, I think distributed ledgers are inevitable. Is the future that many people want, the masses want. We don't want a handful of companies owning all data and all value creation. What we start to see, which I find super exciting, is that real world assets, real yields, real anything is starting to come to fruition, and we start to see that on chain. So we've talked about real estate and real world assets at great lengths in this webinar. A big narrative that's happening across crypto right now is real yield. So what is real yield? It's basically yield being generated on chain, which is being distributed to people who stake the assets. For example, if the blockchain is proof of stake, like Ethereum moved to recently with the merge, people starting to put like transactions on chain, paying for block space. Let's take Ethereum, for example, which can then be distributed to stakers. And all that is, is real people putting data on chain, paying the gas fee to be able to do that. and that being distributed to whoever is staking that asset, ETH, for example. So real yield, real world assets, real anything is coming to blockchain. And that's just a great thing to see. Of course, you have the Pepes and the meme coins and Doge and whatnot. I mean, all that will happen, I'm sure, and it will continue to happen. But as long as we see real stuff also, then the technology as a whole has merit.
Yeah, I kind of echo the same sentiment as Mark, is that, yeah, the merit and then sort of the low-hanging fruit, right, is the ability to provide more democratized access to these very elusive, high barrier to entry kind of private placements, private companies, funds, real estate assets. And then, you know, with the blockchain functionality, that'll be something that continues to evolve. But, you know, I would say the thing that's resonated with a lot of institutional groups and even private companies that are going about doing a new capital raise is providing some sort of liquidity on the back end to their potential investors, whether these are institutional LPs or sort of mom and pop investors. That liquidity, you know, has been key. And then I think it's even more important given sort of the capital market conditions of today, where people are looking for creative alternatives to new capital raises, and they have an audience that probably is a bit more hold period sensitive.
Brilliant, thanks, Ryan. And I think, yeah, I think I should add to the fact that when we say things are developing relatively slowly, they are still developing. And kind of think back to when we launched the Tokenizer in 2019, and there was, you know, a handful of people we worked with, whereas now, yeah, the whole industry, the whole sector is you know, immense compared to where it was, but still can be said it's going relatively slowly. Leanne, I see you got your hand up again.
Yeah, and I think when we set out our MTF was the flagship product, and you know, it's a full exchange designation, and with that, although they're private companies, there are all of the disclosures and constant disclosures that they have to make. And so although small startup companies who are embracing this technology, it's fantastic and we want to support them, what we realize is that probably they shouldn't be on a central limit order book with all that exposure. Somehow a lot of tech company founders, unfortunately, they don't understand market dynamics and how that works, and nor should they. And we only offered an MTF. We offered the big, full-blown marketplace. So that's why we're kind of dialing back and saying, look, if we can offer a bulletin board, which is less regulatory rigorous, we can get those really enthusiastic issuers who have issued the token in our ecosystem, having a liquidity event on a bulletin board. And then I'm introducing a really automated process for issuers to onboard so that then they can move to the MTF seamlessly. And then alongside that, because we don't want our MTF to just sit there, we are building those other products that we think will be interesting to institutions, like the ETPs that may not be in token form, but they still have a crypto, you know, exposure, as well as offering some of the tokenized traditional securities, and just try to get the institutions coming, but then have those early adopters coming through the system that then will drive, hopefully at one point, all the liquidity on the secondary venue. But certainly been slower to adopt, as we've seen, and we have to be nimble and adopt to where the market is, and that's just the reality. But you know, it will get there, we believe.
Great, thanks, Leanne. Massimo, see your hands up again.
Yeah, I think the fact that liquidity is developing slowly is again a matter of establishing what the baseline for liquidity, and also, as Leanne said, looking into really what are the needs of these companies for secondary liquidity, and also what we're really talking about here. I mean, we are talking about a company with a few hundred investors, so a very restricted, concentrated, and investor base. Do we expect them to be active on the secondary market on a daily basis, or on a monthly basis, or on a weekly basis? Is it even desirable from the issuer point of view to provide that kind of liquidity? So I think that where we are at, and I hinted at that in my slide, is that we have this beautiful new product that allows to automate a lot of the flexibility required, and we can build customized liquidity models around that exactly to support that type of liquidity. So if we expect to see liquidity, as we say in central order books, where we're going to have AMMs doing or even traditional liquidity providers doing high frequency trading, I don't think that this is the space. I mean, it's clearly the public market. We will never get there. So we need to build the liquidity models in that match the requirements of the companies issuing digital securities, not the other way around. And again, the humble bulletin board is an example of that. But add an automated settlement system to that, a post-trade, an efficient post-trade and settlement finality to that, and add an automated workflow that handles with registration and deregistration of the shares and share registries and cap tables, handles extraordinary events in the stocks or particular clauses in the shareholder agreements, and then you have a market, then you have liquidity, that is developing slowly, but it's there.
Good stuff. Leanne, did your hand go up again and gone back down, or it's not up? That's fine. Question coming in, and we're kind of answering some of these just with the general answers, which is great, but we'll go with it anyway. From Laura, who addresses all the panelists, and she says, what do the efforts look like to source secondary market eyes on product that's listed on your ATS, and who are these target secondary investors? She says, are we talking retail, international, etc.? Massimo.
Well, that's an easy one for us. It's institutional investors and accredited and regulated financial institutions, family offices, not the retail market yet. We don't think it's ready, and we don't have a regulatory framework that would support that at the moment.
Ryan.
Yeah, and then on the tZero side, it's a combination of retail, so both non-accredited and accredited investors, as well as institutional investors. And then kind of honing into that, it's both US-based, and then we have international investors as well. So as I noted, we have about 42 jurisdictions where we can accommodate investors on an unsolicited basis. And then kind of honing into the specific assets or securities that trade, we do have the ability to create bespoke trading environments. So certain products on our platform trade solely amongst US-based investors. And then depending on what type of offering type, there may be unique kind of trading dynamics with that particular security, right? So if it's a Reg D offering, maybe they want to trade under 4A7, which allows for accredited investors to trade that particular security, and that could be as early as 90 days. And then you could enter into like Rule 144 trading, which allows for both non-accredited and accredited. So, these are kind of more bespoke environments. And again, that's with regards to our ATS environment, but kind of, stepping back, we're trying to create as democratized of an environment as possible, non-accredited, accredited institutional investors who go through that traditional kind of retail broker-dealer experience.
Bob, over to you.
Yeah, so we can service retail clients in 61 countries at this time on an unsolicited basis, kind of similar to what Ryan said there. And our own IPO and offering was very much a success based on the retail investors and the large number. 7,200. We're close to about 10,000 token holders at this point. Predominantly retail. We are very keen, though, to expand and educate and bring in the institutional investors. And one of the things we announced just a few weeks ago was an institutional or enterprise-grade wallet management solution via our partners BitGo, because the institutional investor isn't going to have a MetaMask wallet sitting on the Chrome browser of one of its employees, right? It's going to have a full enterprise grade wrapper around how those tokens are managed and held. And so it's things like that that really break down the barriers to institutional adoption. And so we've now announced this pilot, you know, and they're encouraging, you know, the likes of family offices and private equity and you know, high net worth individuals and the types, you know, to come in and try this pilot and actually see how you can safeguard security tokens using this enterprise grade solution.
Evangelos? Yeah,
and for Oasis Pro Markets, much like INX and tZero here in the US, FINRA regulated, SEC registered. So we can onboard accredited and unaccredited on the retail side, domestic US and international through reverse solicitation. But obviously, as I highlighted during the presentation, we see a lot of value in the B2B and B2B2C plays where we work together with other traditional broker dealers through obviously compliant, you know, the compliant and regulatory channels, but to really be able to empower them to take part in this ecosystem.
Great, and we're nearing the end here, though. So we've got a few minutes left, and I'll just ask a kind of a general question which I saw out there, which was, you know, which asset classes do you see the most demand from? I appreciate for some of you, if you specialise purely in real estate, then that might be a tough one to broaden out. Yeah, if we could just have responses to that, but also if you have any kind of closing thoughts that you want to bring together as well, then that'd be more than welcome to do so. So I don't know who wants to kick off this bit. Massimo, that hand of yours constantly going up.
No, sorry, that was a complete mistake. I'm sorry, but I'll take it. Outside the traditional equities and bonds, we see demand for carbon credits and for commodities.
Short and sweet. Leanne.
Yeah, so equity, but also then adding a twist of equity, so revenue share tokens or a portion of utility tokens seem to be early adopters, but it's now shifting to funds. I mean, in the UK, and maybe that's because our strategic investor Aberdeen made a bunch of announcements about certain things they're doing. We've got a lot of tier one funds coming in about this whole idea of tokenizing feeder funds to access a new investor base. And then over time, getting the advantages that the blockchain will give to the ecosystem in terms of the TAs and administrators and things like that. But they want to be early adopters. So that's what we're seeing.
Cool. Ryan, over to you.
Yeah, definitely. And then, yeah, beyond kind of tangible assets, right? Real estate, natural resources, mining, we see a lot of private companies, funds, and then a lot of these like partnership types of engagements where groups are looking to tokenize and trade royalty streams, so music royalties, film, fractionalized artwork, intellectual property. So these are more like, you know, nuanced areas, sports and entertainment. So we've, you know, spoken to a number of issuers there where they're looking to kind of stand up platforms and then look to trade either in a closed ecosystem environment or our ATS environment. So yeah, pretty excited about, you know, the security space in general.
Good stuff. Evangelos, now we'll go to Bob.
Yeah, so for Oasis Pro Markets, it's a lot of the yield generating type alternatives, let's say ABS, RMBS, CMBS. Real estate obviously is a big one and one true to my heart. But also others like private equity, venture capital, collectibles. We're fielding a lot of calls, whether or not they're worthy, and obviously conducting due diligence is of the utmost importance when we're vetting issuers and their particular offerings.
Jump in, Bob.
Yeah, so you know, speaking to representatives of these industry verticals in these spaces on an ongoing basis, I agree. All of the above have been have been have come through the door at some point or the other. I think seems to be a trend around ESG type projects where it almost feels like the ESG ethos, seems to somehow want to align itself with this democratized, finance for, for retail, and specifically targeting, those types of, projects and having that ethical kind of angle to them. A space that I find really interesting and I'm really spending a lot of time on is the trade finance space. So account receivables and invoice factoring, supply chain management, asset-based lending. I think that's really interesting. There are some structural, I want to say, challenges or maybe opportunities in that space that I think we can all tap into and maybe plug a global deficit in, account receivables financing that now exists. And so maybe the answer is to plug that through retail and smaller institutional clients, because the space is now basically, it's typically non-bank financial institutions or large banks that operate in that space. So there has to be new entrants now. And I think retail and smaller financial, like family offices and could really come in and plug that gap. As far as closing remarks is concerned, again, thank you so much. Really nice to, share this panel with you guys. I'll probably be reaching out to anyone who I haven't, spoken to yet, via LinkedIn. Pleasure. Thanks again.
Good stuff. And Mark, so you've come back on.
Definitely. Yeah, I'm just super excited about all of us pushing the barriers to innovation here. I mean, this is going to be like a ketchup bottle, right? The rails are getting built, the blockchain rails are getting built. And once we start adding tokens, real world assets on chain, it will just, be spread out like wildfire. You start seeing really cool applications, like, for example, borrowing against these real world assets on chain. I think that's going to be so cool when people are able to do that. So yeah, just super excited to see all of us working and pushing the barriers in this space, because slowly but surely we'll start to see the flywheel turning.
Brilliant. And yeah, just I think to echo what everyone's saying on the main chat, thanks to everyone on the panel. Lots of positive comments there, and by the sounds of it, you all have quite a few new connections on LinkedIn and additional conversations and to follow up after this as well. So thanks again to all the panel, thanks to all the participants for all your questions and being involved either on the chat or in the Q&A. And thanks to Klaus, thanks to DigiShares, and no doubt we'll have another webinar from these guys again soon. So all that's left for me to say is thank you very much for everybody, and enjoy the rest of your day.